This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Spot premiums for Middle East crude are the lowest in 18 months due to Russian oil flooding into Asia, and any rise is likely to be limited, industry sources say, as it will take time for demand to recover in China after easing zero-COVID controls. Middle East benchmarks Oman and Dubai crudes, used to price more than half of the oil that Asia buys, have slumped. Their spot premiums over Dubai swaps, indicators to compare values of each crude, are down 50% from November to around $1.30 a barrel, the lowest since May 2021, due to an abundance of similar quality Russian Urals crude and a bearish outlook for near-term demand. The premiums had hit records of $15 a barrel in early March after the Ukraine war broke out.
China is paying the deepest discounts in months for Russian ESPO crude oil amid weak demand and poor refining margins, even though the effective prices refiners pay could exceed a price cap imposed this week by Western countries. The $60 per barrel cap, set by the Group of Seven, G7, nations, the European Union and Australia, took effect on Monday to limit Moscow's power to finance its war in Ukraine, though Russia has vowed to defy it. China, Russia's top oil buyer, has not agreed to the price cap. Traders said they were doing business as usual.
Moving on to the top news in the energy sector.
The share of palm oil in biodiesel and in food in the European Union is expected to fall significantly within the next 10 years, leading to a sharp drop in imports, the European Commission said on Thursday. In its 2022 to 2032 agricultural outlook, the Commission projected palm oil would account for 9% of total biodiesel output by 2032, down from an average 23% for 2019-2021. Under the EU's Renewable Energy Directive, palm oil-based fuels, accused to be linked to deforestation, are to be phased out progressively by 2030. The move raised outcry from the world's two largest palm oil producers, Malaysia and Indonesia.
Oil rebounded on Thursday after 4 sessions of decline, boosted by hopes that easing anti-COVID measures in China will revive demand and by signs that some tankers carrying Russian oil have been delayed after a G7 price cap came into effect. China on Wednesday announced the most sweeping changes to its resolute anti-COVID regime since the pandemic began, while at least 20 oil tankers faced delays in crossing to the Mediterranean from Russia's Black Sea ports. Brent crude rose 69 cents, or 0.9%, to $77.86 a barrel by 14:45 GMT, while U.S. West Texas Intermediate, WTI, crude gained $1.42, or 2%, to $73.43.
Next, we have the top news in metal markets.
Copper rose on Thursday on hopes that an easing of coronavirus controls in top consumer China will increase demand, with Goldman Sachs predicting prices could reach a record high of $11,000 in a year. Benchmark copper on the London Metal Exchange, LME, was up 1.1% at $8,545 a ton in official open outcry trading. Weakening growth in China and elsewhere dragged prices from a high of $10,845 in March, but the market is now anticipating economic recovery.
Iron ore futures rebounded on Thursday as higher imports into China suggested improving demand, with easing COVID restrictions in the country boosting hopes for a rise in consumption. The most traded May iron ore contract on China's Dalian Commodity Exchange advanced 1.4% to 790 yuan, $113.37 a ton. Dalian iron ore prices have risen about 30% since the beginning of November, boosted by China's ramped-up policy support for ailing domestic property developers and easing of its COVID-19 curbs. We will now look at the top news in the agricultural. Brazil's total grain crop is expected to reach a record 312.2 million tons, Government Food and Statistics Agency CONAB said on Thursday, up 15% from the previous year though slightly down from a previous estimate of 313.04 million tons. The South American nation's soybean production is seen reaching 153.48 million tons in the new season, up 22.2% year-on-year. while total corn output is expected to jump 11.2% to 125.83 million tons. CONIB's previous projections for soybean and corn stood at 153.54 million and 126.4 million tons, respectively.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.